Good evening, gentlemen and ladies. I'm saying gentlemen because I see already Arthur and Martin and Mr. Panulo in here. How are you two gentlemen doing? Would you guys do me a kind favor and tell me if the music is too loud in the background? Okay. You guys hear me perfectly? Hey, Jam Bams, how are you doing, my friend? Nice to see you in here. I had a wonderful 4th of July. In fact, I'm still jet lagged from it. But finally I've landed. It was a privilege to actually, and it was wonderful to meet you and, well, speak to you momentarily the other night. I look forward to speaking more and more on Discord with all of you guys and more people. All in AMC, wow, coming in straight hot with questions. What's your thought on 475 cost to borrow? All in AMC, I'll do you a favor and tell you this is the max. It's not necessarily what what they're offering everyone. It's the max cost to borrow. So it's good though. It's good for us. The higher everything is, the better it is for us. So fingers crossed. And the jinxed evil eye protection right here. I was given this from one of my friends that was overseas, and they brought me this and they said, hey, hang this in your room somewhere or whatever. I don't believe much in this stuff, guys, but I was cool looking. It's nice. Although this knot is a little weird. But yeah, I don't know yet if it's working or not. Hopefully that answers that. All in AMC. The question. PV, how's it going, brother? Okay, thank you, Jam Bams. A little louder, like this. Come on, everybody in the family, help AB tune it out. If it's too loud, I'll put it down a little bit. If it's too low, I can still put it up a little bit. Let's see. What do you guys think? Where is it at? And don't tell me things I want to hear, guys. Obviously, say the truth so we can get on with the show. So if it's too loud, vote for it. If it's too loud, let me know. If it's too low, we'll go higher. Frankie, how's it going, brother? How you feeling? Nice to see you in here, brother. Let's see who else is in here. Leo the Lion. What we got for AMC today? That's your catchphrase. Manjeet Bian, how are you doing, my friend? Nice to speak to you the other day. Well, yesterday on Pantheon's chat. Wonderful video, by the way, that he had. Jay Pertagi, how's it going, brother? Thanks for the love. Appreciate all of you guys. Okay, so we got a few things to talk about. Some of it is going to be about the 19 virus. I'll put it that way so I don't have to say the whole thing. And we got to talk about the recession and what we're anticipating to come even worse. Even more fears grow even though we're all as investors know that there's a recession coming, but the rest of the world is still not seeing it. The non-investors, which is the overwhelming majority of the world, right? And it's at this point, it's nobody's job, but at this point, all those people that we're talking about, all those non-investing, public like us, it's gonna come back down to us. It's on our hands to get them somewhat notified about what's coming, because a lot of people are in the dark. And I understand when you talk to people about, invest, what do you think about AMC and the meme stocks? And I'm not even talking about that. I'm talking about looking out for the well-being of people, whether they're friends or loved ones, even if they didn't believe you on the AMC or the GME train or whatever, and they don't want to invest, it's fine. But that doesn't make it like for us. You have to still be humane enough to obviously to think about if we know we're seeing these stats and they're completely obliterated, like in the dark about it, at least give them some talk about that. If they don't want to obviously invest in things and they think of you as crazy for investing in meme stocks and whatnot, it's fine. Let that be the case. They don't want to get wealthy. It's fine. We're not trying to be financial advisors for nobody, because we're not. None of us is financial advisors. But you can still tell people about the recessions that are coming, and there are proper ways to do it. And there's some documentations that can show it to these people. So when they read these kind of things, they'll be like, okay, I might not be an investor, but I need to watch out for my family. Because at the end of the day, I don't care. Like all this stuff, even AMC or GME, can be put on the side, because I'm human first, and then everything else after. So we got to look out for them, because obviously the 1%ers, it's their number one thing to go ahead and try to make money and milk the 90% in order for them to get wealthier and wealthier. And that's how they siphon all that liquidity up from the bottom top to the top, where in reality it should be the opposite. So give me thumbs up if the music is not too loud. If it's well, there's I don't want no thumbs down. Go ahead, give me thumbs down if it's too low. If it's too loud, also just let me know, guys, so I can go ahead and show you the things. Let's see who else is in here while we're looking. Where are we fixing out the music and tuning it out? Let me see who's all in here. In the clutch, as always, in the clutch. Thanks for stopping by, brother. And we got some cool things to talk about. So wait and see. Jam Bams, I appreciate you so much. Thank you, my friend. Mr. McCown, nice to see you in here. All right. It's a lit chat tonight, I see. All right. Thank you, Frankie. Appreciate you. Mrs. Tahiri is in the house. Wow, I'm missing some comments in here. Mrs. Veronica Chase, nice to see you in here, my friend. It's always a full room with Mrs. Veronica, and obviously all of you guys in here. I always like to give each person their due diligence of what they are valued to me, and I end up falling for one. The next thing you know, everyone else, because you guys all mean the same to me. Chip McAllister, how are you, brother? Thanks for the thumbs up. Perfect on the music. All right, so let's start talking about basically the market today, and like what we have seen today from the markets. Today you've seen something that really is not reflective on what we've been, like what the reality is. And this is the problem of when you have a a government body that is like the feds, in other words, and in fact, all the other bodies, when they keep people in the dark and keep propping up markets, when the fall happens, it's not just going to be something bad. It's going to be a disastrous fall. And in fact, like anybody who haven't obviously believe in a recession to come, or even worse, those non-investors who are oblivious to everything, they just know that the gas is higher, but they think it's transitory because just like the inflation is transitory. And guess what? Here we are. You got some places, as I reported before, like Argentina, and many other countries, whether Sri Lanka and the whole globe, is experiencing some crazy stuff. We have a lot of employees going on strikes, various sectors globally. And we would be fools to think that whatever happens outside in the world will not eventually affect us. Because at the end of the day, economies are all entwined. So in order for me to sell something, there has to be somebody to buy it, right? Just on a simple form here. And if I have something to sell, but it's very scarce, so I have less of it, but I still want to make my profits, what do? I raise the price for lesser quantity, more profit and more money, to either have the same profit or even take advantage of the situation and make profits, higher profits, which many oil companies have been doing. So let me read a comment right here. When I talk to folks about the economy, they tune out. They're so not prepared for the near future, much less long term. It's sad, really. It is very sad. And I would suggest Arthur and everyone else that's listening, instead of telling people about this, there's an indirect way to do it, because people, unfortunately, they're so mentally ingrained with the idea that you listen to certain people in certain with certain accolades. So for example, if you were Bill Gates, and I know how we all feel about him. In fact, we're going to talk about it a little bit here in the show today. But when he comes out and says, oh, recession, or this is going to happen, and this is blah, 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 they're going to tune in and listen. That's an unfortunate part of our society, you know, where the people that are hurting us are the people that we're listening to. But the best way to probably approach people with our accolades, basically, that's if you care. Still, even people don't want to listen, you still, to me, I still have to care, because it's not like if a man or a woman are not listening to what I'm telling them, it's not them that I'm really more worried about, even though that, you know, I still feel for them, sympathize with them, but it's their family, their kids, their other ones. Those are the ones that tend to get hurt and get stepped on in these situations when those times come. And what good would it do when somebody says, I'm sorry, when the damage is done? Well, I guess depending on what kind of damage, right? So approaching these people would be more like, hey, check this out. Don't even prepare them for it. Just tell them, check this out. Some people have this psychological effect of wanting to they're like more engaged when they feel like they are the ones who are finding this, you know, or like they're researching it, and something caught my attention, and now I'm going to go further and further, you know, and do that. I mean, I'm not saying go door to door and do this, but if I see someone and tell them, hey, look at this. This is very interesting, and walk away, even to a stranger. And if that catches what they read, and I'll give you guys a document right now that you could, you know, share it with many of your friends, loved ones, or even random strangers. You know, you never know the kind of effect you could have on somebody's life. Because at the end of the day, like I said, we are all in the same basket. We're part of the 90%. And overall, for me, I care about the well-being of all these people. I'd never want to see pictures or videos of children, you know, having malnutrition or bad habitat living or any of that stuff. And where we're heading to, we're embracing for way worse than that. We already have terrible like pandemics, as far as not with disease, but more like pandemics with endemics with like drug abuse and homelessness already. Imagine with what's yet to come. AB, I would like your thoughts and speculations on Q2 earnings. Promise not to hold anything you to anything. No need. Here's one thing I can tell you. Q2 earnings look extremely bullish. Like extremely bullish to, I even mentioned before, to the point where I see the business in the end, by the end of Q3, possibly by Q4, but there's a good chance for by the end of Q3 to go profitable, you know, as a business, and we can start tackling even more and more of that debt. But see, here's the thing. Think of it as a mortgage. When people go get a mortgage on a house, they expect to make the payment on it for, like, you know, over the next 20, 30, 40 years, whatever the case may be, you know, whatever they work out. Now, the bank is also banking, or you yourself are banking on the fact that you can go and work and do variable things or many different things that could make sure you can make that payment on time until the maturity date. And in the same time, you're also sustaining a living and perhaps even more, you know? So think of it in that sense. So for AMCs, like an individual, same thing. It took all these loans in the past to ensure its survival. Now it's on a much better and better, like it's getting better and better, numerically speaking, not just AB. You guys can look at those numbers yourselves. I can't research it right now and show you, but pretty sure you're seeing them, what the projections are. And when we announced them, like today, I seen an article about AMC saying that, oh, the debt is clouding the picture. It's not going to be a profitable business. These articles, I mean, again, it depends on what side you're on. That's what kind of, like, you either take it with a grain of salt or you just completely abolish it. For me, I completely abolish it because I'm seeing the future outlook on things, you know, like numerically, the business hauling in more money. Fundamentally, we're looking extremely better and better. And yet there is a lot of money that we have on the side. And that's the crazy thing about the debt. See, a lot of people forget about the part where Aaron went and restructured our debts, majority of them, to mature, one, for lesser rates and to mature even later. So therefore, we're not under pressure by any means right now, which is a very solid thing. It's a strong, he basically added a stronger stability to our foundation. And now with huge movies doing this kind of money, movies that the world didn't even expect to do great, like the Minions was expected to be an okay, but no one expected it to be record-breaking. Movies like that, and we still have, this is like, we're not even scratching the surface yet. And on top of that, we're sitting on a bunch of cash that they could utilize at any given moment, like they did with HYMC. So looking forward, there are a lot of good ideas that are floating around as in what they could do or what they should do with it, and I can't anticipate to see what really happens. So that's my outlook on it. Hopefully that answers it, Arthur. Don't know, and you can hold me to it. Let's see. All right. So as I move forward now with this, let's see who's in here. Let me just say some highs and jump in and talk and show you guys what I have to show you. We got Subel the Boss. How are you doing? Welcome in here. B Ghost, how are you doing, my friend? Nice to see you in here. Leah, it's always a pleasure to see you and to obviously have you in here. Week 2, Q3 looking strong as F. Arthur Martin, you almost got me to say the word, but I agree with you. So I hold you to it too now. Hoax, nice to see you in here, my man. Get some rest, brother. Get some rest. And we got Brenda's and Ella's Fun Adventures. bbby. All right. Let's get started. And today I want to talk about first, before, well, I'll save the best for last, I would say. we're going to talk about this. The whole COVID thing, you know, where we basically were all living under this whole COVID problems. Shoot. Right here. So here's and this ties into what we're in and how this is making money for when we're in these kind of situations. It makes banks a lot of money. In the same time, this fits into the idea of a new world order. You know, those individuals before COVID came about, remember there was like a good period of time where there was a lot of noise about new world order. Bill Gates is pushing for that. We need to limit the amount of people on Earth because it's hurting it, and global warming and all that stuff. And then suddenly that kind of got silented and died out. And then momentarily right after that, we had the breakout, obviously in 2020, and things went on and on and on and on from that. So as far as when I was looking through the COVID stuff and everything, we got a person here who ties us to stuff. The Eco Health Alliance. This is a non-governmental institution, and many of you might know them already. But them being not a government institution and also still get funding from the government, you might want to see how crazy this is right here. Where are we? So we don't want to look at the, we can read the history if you guys want. It was founded under the name Wildlife Preservation Trust International in 1971 by a British naturalist. His name was Gerald Durrell. It became a wildlife trust in 1999, and in the fall of 2010, the organization changed its name to the Eco Health Alliance. This isn't like, so far it's just warming up. So, what do these guys do? The organization held an early professional conversation medicine meeting in 1996. In 2002, they published edited volume, blah, 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 Oxford University. We don't need to really read this. I just read it. So in 2008, they published a paper in Nature entitled Global Trends in Emerging Infectious Diseases, which featured an early rendition of a global disease hotspot map using epidemiological, social, and that's a tough word to say for me, and environmental data from the past 50 years. So, the Eco Health Alliance funding, this is important to pay attention to. Funding comes mostly from U.S. federal agencies such as Department of Defense, Department of Homeland Security, and Agency of International Development between 2011 and 2020. 2020. Its annual budget has fluctuated between US $9 and US $15 million per year that they were basically getting funded. Now here we get to start having some fun. Following the outbreak of the COVID-19 pandemic, Eco Health Alliance has been subject to controversies and increased scrutiny due to its ties to the Wuhan Institute of Virology, which has been the center of speculation since early 2020 that the SARS, COVID, may have escaped in a lab incident. Prior to the pandemic, Eco Health Alliance was the only US-based organization researching coronavirus evolution and transmission in China, where they partnered with obviously the Wuhan Virology Institution. Among others, Eco Health President Peter Daszak co-authored blah, 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 where he's saying, no, we didn't conspire with them, and this is what we do, and this is what we go through. In April 2020, the NIH ordered Eco Health Alliance to cease spending the remaining $369,000 from its current NIH grant at the request of Mr. Trump, pressuring them by stating that it handed over information and material from Chinese research facility that it was never able to do so. The grant got canceled. It was supposed to go through until 2024, the new one, but it got canceled then. Now we got some funny stuff in here. There's been center political conduct during the pandemic. Blah, 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 blah. In October 2021, the EHA submitted a progress report detailing the results of a past experiment where some laboratory mice lost more weight than expected after being infected with the modified bat coronavirus. The NIH subsequently sent a letter to the Congressional Committee on Energy and Commerce describing this experiment, but did not refer to it as gain of function. Whether such research qualifies for gain of function, it's a matter of considerable debate among relevant experts. So now you're probably thinking, you're like, okay, so what happened with this gain of function thing? We'll go look over here. After discussion emerged as to the safety of gain of function research into viruses by genetic modification of natural viruses, stated that such research moved the virus from a candidate emergent pathogen to a clear and present danger. And that Zach estimated that the EcoHealth Alliance had spent about $100,000 annually to collaborate with researchers at Wuhan, when they previously said that they've never, had any ties to them. Well, that right there doesn't prove so, and publicly. So in 2014, the NIH gave the EcoHealth Alliance a grant of 3.4 or 3.7 for the study of the coronavirus in bats in 2014, to be dispersed over 6 years. So they had a project. Think of it like this: it's like you have a project that's beginning at a certain day when the instructor gives it to you, and then it's due by a certain day. This grant was basically due over 6 years, from 2014 all the way to 2020. Because 6 plus 2014, I'm not that great at math, but that comes up to 2020, which ironically, whatever happened there, I don't, you guys might remember what happened then. So what else are they doing? They're doing projects like Predict, Ideal, Rift Valley, and Bat Conservation. Wow. Project Deep Forest and Project Diffuse. This one is crazy right here. We'll go over it right now. Let's see. Which one did I want to read? Not this one. Not that one. This one. So a growing body of research indicates that bats are an important factor in both ecosystem health and disease emergence. A number of hypotheses have been proposed for the high number of zoonoses that have come from bat population in recent decades. One group of researchers hypothesized that that flight, a factor common to all bats but to no other mammals, provides an intensive selective force for coexistence with viral parasites through a daily cycle that elevates metabolism and body temperatures to the febrile response in other mammals. On an evolutionary scale, the host virus interaction might have resulted in a very large diversity of zoonotic viruses in bats, possibly through bat viruses adapting to be more tolerant of the fever response and less virulent to their natural host. So basically, it got to a point where whatever they were, here's where AB goes on a hypothetical situation, because it's nothing is verified by paper yet. But basically, whatever these bats, whatever there was done on them, apparently it showed right there, like, what it does. It there's like a bunch of parasites that cycle through you daily, and then it elevates your metabolism and body temperature, which is some of the symptoms we've seen in people who had COVID, right? The thing is right here is that what they're saying is that those bats were able to be adapt to that life or to that thing within their body. So therefore, they're adapting to it. But I wonder if there was a soup drinker, a bat soup drinker or eater who possibly ate that, and then next thing you know, it became a pandemic. Could be. What do you guys think? We got Project Diffuse, which was rejected. Basically, they filed for a grant which proposed to sample bat coronavirus from various locations in China to evaluate whether bat coronaviruses might spill over into human population. The grantees proposed to create chimeric coronaviruses which were mutated in different locations before evaluating their ability to infect human cells in the laboratory. One proposed alteration was to modify bat coronaviruses to insert a cleavage site for the furin protease at the S1, S2 junction of the spike viral protein, the S viral protein. Basically going into your DNA. Another part of the grant aimed to create non-infectious protein-based vaccines containing just the spike protein of dangerous coronaviruses. These vaccines would then be administered to bats in caves in southern China to help prevent the next outbreak. So let's backtrack a little bit. I wonder if this kind of checks out, that somehow some things were administered to some bats in some caves. Those bats were captured, they adapted to whatever they got injected with. And then, we know that there is parts in China where they enjoy a meal called, the bat soup. And perhaps some of these bats have been given out in public over there, and then maybe that's the way that it got completely went viral, I guess. But I don't know. I'm not the Fauci here. So enough about this, guys. We also have Canada. Look at this. Canada is trying to approve Moderna for its kids, and it's going to be like a first kind of thing that they didn't do forever. Where was that? Found it. Forget this. Let's look at some of this and look at some comments. Isn't that beautiful? This is Maui Beach. This is beautiful. You guys want to see the sunset? Or do you guys want to see sunlight? Let's see. This is a beautiful one. I love the blue. Diaz, I like the dinner music. I just looked over and that's the first thing I saw. I'm glad you like it. Hopefully you're eating good dinner too and enjoying it. So basically now Canada is trying to administer or approve Moderna vaccines for kids. Apparently there's about 4 or 5 million in the population, kids who are 5 years or under. And they're trying to see if they could approve that to be given to them. And you can only see exactly where we're heading with this, guys. Like, this is intense. This is crazy that they're administering this stuff over to, now they're kids. Like, they want to even do that. And all that stuff is going all around. It's coming here, it's there, it's everywhere, which is crazy. It's dangerous to go ahead and apply something that can live or become part of your DNA at such an early age to kids. I mean, I'm not a doctor, I'm not a specialist by any means. I will never give financial advice or health advice, I guess, in this case, but I'm not an expert, but even some experts, I believe, if you search into it, that's extremely dangerous, especially at that young age. Yeah, that's crazy. The other thing I wanted to also show you guys, one second, let me look at some of these comments real quick. So we also had today, see this, type this. The mic is always in my way. All right. So we also got this today, and let's read it together. No, I don't want to support CNBC. Bonds flash recession warning. Lights as key part of the yield curve inverts again. See which one. The closely watched Treasury yields curve is sending a warning that the economy may be falling or has already fallen into recession. The curve between the 10-year Treasury yield and the 2-year yield has become inverted, meaning the 2-year is now higher than the 10-year. There's something afoot in inverter sentiment that is difficult to ignore, given the inversion is occurring with 10-year yields below 3%. Said one bond market strategist. By the way, I've not read this article before, but I'm happy to read it with you guys. I just know that this stuff happened today. And why is that extremely crazy? Because I'm gonna give you guys an idea, like a thought. Think of it like this: as these short terms are getting higher, you got banks have access to get loans, basically, or money via the Fed for less of a percentage. Even though if it goes higher, it's still less for them. And what they do is they turn around and administer that money that is supposed to be liquidity in the market, which is what the Feds is saying, that, oh, we care about market liquidity. And what that does is that what the banks do is they turn around and add on that fee. So it's kind of like a purposeless position, because if that's like, why wouldn't it, like, I mean, think of it like this: why wouldn't we just take out banks completely out of the equation and just have a straight Fed to people, right? Where we go there for the liquidity for that. I understand they put the banks to say that you administer this, you're the body or the entity that can administer this, but those are the people and those are the entities that are actually purposely crashing the market, because they make a lot of money in these times like this. And they also can get a lot of mortgages, because once they give out that money, if think of it like this: if the bank got a money from the look what clown they put on here on the screen. When they take the money from the Fed, you got, let's say they got it on a 3% rate. Okay, let's just go with the flow here. Well, hypothetically speaking, if they got a 3%, what they do is they turn around and administer that money or make it available for people, but obviously at a higher rate here, so that they can make money. So I don't get it here. Like, the point, if your intention as the Fed, if your intentions are to do things to make sure that liquidity is in the market, because again, the Feds were never part of, or not never, but they're not supposed to be part of the repo and reverse repo transactions. They're only a part of it in select times, like severe times, like similar to what happened in 2020. So they step in and they administer this, liquidity. But the problem is, if that's the case and they lower their interest rates and everything, you got so much money coming out. Banks are putting it out. They're always going to get their money back. If they don't get it, they get the property or whatever it is they also gave you the mortgage on, or gave you the loan on, or the money on, whether it's on assets, securities, or obviously a home. So when the curve itself, since it's inverted now, once it becomes more flattened, that's where you have the catastrophes in, the complete rising in the bank is going to be like, okay, well, I can't push this higher and higher, and basically their profits, because the feds are from the background, they're actually going ahead and hiking rates. Bank is saying, no, that's fine by me. I'm not the one who's hurting. These poor 90%ers, those are the ones that are going to really pay for this, and it's going to hurt them when it's supposed to be in reality administered so that it can look hot for us. It's actually hurting us. And then the bank is saying, okay, I tag on my rate. I'm making my money. Let's stop right there for a second. If the main solution here, or if the main purpose here is to save the economy and making sure that we don't go into a recession, then why wouldn't it be interestless? It's fine. As far as cost of operations and whatnot, that's not the only way that these banks make money. They could go ahead and be compensated for that by the Fed, since the Fed is obviously clearly trillions every day in repo and reverse repo operations. But again, that's not feasible, because they're not gonna they're not gonna love that, right? It's not the way that it works. That's why people like me will never be the leaders of the free world or in high positions, because we won't buy into this kind of crap. So here, let's read. The bond market is flashing a warning that the economy may be falling or already has fallen into a recession, according to one closely watched measure. So to all of you guys in here, Arthur, if you guys want to reach out to people without having to reach out and explain personally or get involved with them, give them this kind of article. When they read this, you would have to be, at that point, you cannot say, oh, I was never notified. I didn't know, it just snuck up on me. Life was moving normal, and suddenly one day I lost my house, and I lost my job, and I lost my job first, and followed by losing my house. And now we don't know what to do, and my kids are suffering from this. Let's go out and get torches and burn down buildings and everything. That's eventually what these things lead up to, right? But when they see this, they can always remember that, hey, remember somebody, whether it's a friend, family, or a stranger, they're gonna be like, okay, well, I see this. I was taught, like somebody. I remember when somebody talked to me about this. I should have listened, because I read it. A lot of people, you'll be surprised, a lot of people will get influenced by it, and they will go and get those magic fingers to work and start researching more about it. And then at that point, what you could do is send them over to AB Investments. I'm just kidding. Basically, they'll do their own due diligence, and then they will be like, okay, this makes sense. When they start digging into it and see banks like Morgan Stanley and all the other banks saying, yeah, it's most likely we're going to go in a recession. At that point, you don't even have to, you just saved all your time and all the amount of explaining to someone, because at that point, they're not going to be approached to it defensively. Sometimes when you share something with family or anybody, because you're a common citizen like them, they will look at you as, they will approach what you're saying with defense. So therefore, they're looking to poke holes in whatever you're saying or your theory. In reality, it's not your theory, it's what's happening. Their wall is built so high psychologically at that point that they're not even listening to what you're saying. So, but when they go and see it for themselves like this, then, it's between them and themselves. They can't lie to themselves or have a defensive mechanism or wall against themselves, against their own eyes. They'll be able to see it. So market pros watch the spread of the treasury yield curve, or the difference between the longer duration treasury yields and shorter duration yields. Normally longer duration yields, like the yield on the 10-year notes, are higher than the shorter duration yields, like that on the 2-year yields. But the 2-year yield has now risen above the 10-year yield. This is exactly what we were just talking about. As of midday Tuesday, the 2-year treasury yield was at 2.792%, above the 2.789 rate of the 10-year rate. That is called inversion, my friends. Is a warning sign that the economy could be weakening and a recession is possible. There is something afoot in the investor sentiment that is difficult to ignore, given the inversion is occurring with 10-year yields below 3%. Said the Ian Lingen, head of US rate strategy at BMO. I wouldn't say it's a direct indication that a recession is near-term risk. Rather, it's consistent with increased concern about recession. This is where politicians come in and say things that are higher figures in positions that allow them to come out and say something, and basically people are like, okay, you know what? I'm not going to give you a direct answer, but I'm not going to also give you a no. It's kind of like, well, no, I don't want to even use that example. Scratch that out. You guys are, you get what was just said. One way to look at the importance of the yield curve is to think about what it means for a bank. Oh, the yield curve measures the spread between a bank's cost of money versus what it will make by lending it out or investing it over a longer period of time. If banks can't make money, lending slows, and so does economic activity. What we just talked about, when they can't make their money. After a burst higher to nearly 3.5% in mid-June, 10-year yield has slumped to 2.78% and was hovering just below the 2-year note's 2.79% yield. The 10-year had moved higher on worries about inflation, but reversed course as investors became more worried about the economy. Yields move opposite of bond prices. The benchmark 10-year is widely watched because it influences mortgages and other lending rates. The 2-year is much more influenced by the Federal Reserve interest rate hikes. So now you guys get the difference between the two, and it has been moving higher. I don't know if it, in and of itself that it's a recession indicator, said Gregory Carnulo. Again, another thing. There is a battle going on between inflation and growth for the Fed. My view is still inflation over growth. So the 2-year, and you guys, some of you longer term subscribers here, you probably remember back in March 31st, I reported this back then when it happened as well. And now we get another one. So the 2-year of 10-year curve first inverted in March 31st, then again briefly in June. Farnulo also pointed out that the curve was inverted in 2019, warning of a recession, but because the Federal Reserve was cutting interest rates at the time, he said a recession may not have occurred in 2020 were it not for the pandemic. So if it wasn't for all that money, this is why you guys always hear me say that it's in their interest to crash the markets. You know, it's in interest because they make money in down, like economic downturns, in other words, and then they get ready to buy everything back at low and rebuild all over again. Because when you continue building and leveraging and keep giving yields on loans for later, but then that person lends it out to someone else for a higher percentage, but when obviously it reaches a point where, this is why you always hear 12 every 10 to 15 years or 12 years there's a recession. Well, that's because the body of like how we build the economy is the same since the economic setup here in our nation. And since we influence the whole world through many things, whether through the IMF or whatever, that also gets portrayed on like, it gets dispersed throughout globally, basically throughout the whole world. And when these guys can't get to a point when they can't make money anymore, it becomes very profitable for them to short and destroy the market, because there's a lot of money in that for them, and then they will rebuild again on a shaky and screwed up and very effed up and scandalous economy, and then they go ahead and do it again until the next down cycle, or as Ken G like to refer to it as, every economic tenure it ends with a recession. So this is I hope you guys see the small connection lines that I'm drawing between first the virus, why I covered it first, and all the things about it in the background, and then leading to this that we're talking about, and why it was like, sometimes when you need the reason to go ahead and pump and buy assets. And you remember I also said that in these times, and this was a while ago, you would see bigger entities consume and devour smaller ones because they can't survive these conditions. And we've been seeing that happen a lot. And this is, again, to whose advantage? It further strengthens the overall hierarchy, which is these big banks, and like Goldman's and Barclays and JP Morgan's and all these guys, in the past several weeks, the market has become more spooked by the potential for a recession. Economic data has weakened. The Federal Reserve Chairman Jerome Powell has indicated the central bank would be steadfast in its fight with inflation. Man, you've been doing a great job. Investors have become more concerned the Fed will raise interest rates so much that it slows the economy to the point where it tips into a recession, which is inevitable. While the market has become fearful, many Wall Street economists do not expect a recession this year, though. Some are predicting the economy could enter a period of contraction next year. Faranilo said Powell was recently asked about the potential for curve yield inversion. His answer was, "We're not worried about that right now. We're worried about bringing inflation down to 2%. It's definitely inflation over growth. And the Fed is not worried about the inverted yield curve," said Fernando. And it sounds, okay, it sounds like it's the right thing to say, because it's kind of like somebody who's, and this is a crazy example, but this is the one that comes to mind first. It's kind of like somebody who just got shot in the foot, and someone else comes and says, "Hey, so what are you planning on doing tomorrow? Or should we go? Are you going to be able to go to work tomorrow?" Like, they're worried about the growth, versus right now the person is shot, which is about the inflation. You see the similarities here with this example. It's probably a bad one. I probably butchered it, but that's the best way I could put it. I'm pretty sure you guys already understand it. And basically that's what Mr. Jerome is appealing to here, and saying that, hey, we're worried more about this right now. That's something for a different day, because if you are a listener and you hear something like that, what does that tell you? Recessions happen when obviously in recessions there's no growth, everything's down, everything's screwed up. When he say, "I'm not worried about that, I'm worried about the inflation," inflation normally also leads into recessions, and they try to tackle that, but he says we're not even worried about the growth. That's in its own outright telling me, like, appealing to me that, oh yeah, this is going to be an inevitable thing. There is a recession coming. So anybody that's reading this stuff is going to be like, okay, even those people that don't want to listen to you about the recession coming, when they read this stuff, they're going to be like, I feel like I'm the first person onto this. That's just how people normally are. It's a human mechanism. And that's a good thing. We want to reverse psychology this into the people so that they can finally let something in that is truly happening and is about to happen. And overall, whoever they thank, if they thank you and they never knew who you were, you just gave them that help, and they thank you later, dude, that's amazing. I mean, for me, that's what it's all about. I don't need the thanks. I don't need all that stuff. I just don't want to see sadness and families, and destruction amongst families, homelessness, drug abuse, all that kind of stuff comes from these kind of conditions, and especially when recessions hit too. This one is not a recession. This one is you know how we had the Great Depression? This is setting up to be the greatest depression. Again, you got countries like Argentina who's battling 60%, and by next month they're expecting it to be 80% inflation. Okay, I think enough of this right here. Let's look at the comments. Let's talk with the people. Let's see what else I need to cover. Oh yeah, what else we need to cover? We could talk about, look at this now. It's looking even better and better. Let me see if people come on. Look, people are filling up the beach now. Post MOAS, people. Post MOAS. Let's see. I think I'm behind on a lot of things. Yeah, I'm behind on the comment section. Ooh. Mr. McCall said, if someone ran on exposing Wall Street corruption, they'd have at least 4 million votes. Oh, that was about the office position. You guys are so amazing, man. All 4 million of you. Where am I? Okay, let's start right here. All right, over here. Mr. Corbin Dallas, nice to see you in here, my friend. I just now seen it. Mikey J, nice to see you in here, brother. You're the GOAT, brother. Diaz is approving, saying yes, the yields are ridiculously close to one another. Sub has the boss. Aha, makes sense. Crash the market and buy low. Yeah, that's one of the ways they make money, and short it too. Well, I'm honored to hear that, Mrs. Veronica Chase. See, people do have influence on their families here. Yeah, Jeffrey, they all call you crazy, but then when obviously the crash happens, everybody will start want to be your friend, or in fact, they'll definitely try to become your best friend when the MOAS happened, for sure. Which unfortunately also coincides with the market, you know, being completely nuked. All right, I think I'm all caught up right here. Well, at least to the best of my knowledge in here. So, what else are we going to talk about? We're going to talk about the crypto, as I've been telling you guys for the past months. No, but more recently, the past few weeks, we've been seeing the crypto is one not breaking the resistance level of above $21,500, more precisely 600. So as far as Bitcoin, but what it's also doing is that it's making sure the entities behind what is happening or orchestrating what's happening in the background, they're making sure that it does not also drop below the support, which in these certain levels, there will be a lot of institutional and big whale retail, big whales that have, stop either losses or you'd have liquidations or entities or, like Voyager throughout the weekend, many other crypto entities that could basically get liquidated. I think that level is $17,500 if it breaks under that. So every time it touches that 18,000, which it did this morning, it's crazy how it was able to get all the gains back up, and it did this on more than one occasion, giving me the indication that this is a pump and dump scheme for liquidity not to use and not get back. So what's happening is somebody is selling. Again, this is all in my opinion. And what they're doing is they're using that money throughout the market on throughout the day to go ahead and pump and dump some stocks, those little penny and pharmaceutical stocks. And next thing you know, by the end of the day, this is when you see those stocks in the after hours dropping, and then you'll see crypto by the next day, basically when money transitions from one account to another, next thing you know, crypto is pumping back to that $20,000 range, which is, again, keeps it neutral and a little bit far away from liquidity crisis on it, or liquidations or margin calls. But in the same time, it's not breaking that resistance of 21.6, which indicates to me that, again, over and over again, as I said before, when the time is right for them and they see basically, obviously Bitcoin is moving down and all crypto is in a sell-off zone. And let's see some things real quick here. I'm gonna look at AMC's chart first. So we had basically a bearish pendant right here, obviously, which showed that we were going to get, and as you can see, we did drop in value, but we picked right back up right here. Let's look at their last. Such an amazing flag, like the bull flag. Oh my god. And let's look at the options chain as well. Yeah, you see how now crypto going back down, getting more money out. It's so crazy, the pump and dump crap that is happening. So as far as for options, ooh, yeah, we're gonna be possibly anticipating a run up to entice people to buy options, possibly tomorrow, actually. And I anticipate it could be going from where we are to. Hmm, let me check just one more thing real quick before I say to where. Majority of those got traded. We got three, six. It's not very, very clear to me, at least on here. Let me see the options chain. It definitely looks like we're having a run up. That's for sure. Now, how big, obviously, is not indicative as far as for the near term future. I also wanted to, I also shared with you guys on my last live stream the extreme importance of this week, like as in this Friday slash next Monday slash next Tuesday. And I broke down the large numbers, it's in the millions on each day. Like on Friday, it was like 2 million that is supposed to be delivered as far as for FTDs. And then on Monday, there's supposed to be also like another million and a half or something. I can look it up. But let me see this first. They're gonna want to try to keep us under 1355, but it looks like that's probably like what we'll see, like like run ups to up there and probably a little bit above it. But it's looking really on the options chain is looking really risky because it's like it's not as obviously as clear. A lot of times it's clear, and this one is not. I'm not seeing it. It looks like it's indicating for an up move, but how big or how small? It's obviously, not, I haven't met the people that could tell you that. Uh, okay, while we're looking at this, let me look at. See these these three dates right here mature this week. Friday, the 8th is Friday. The 11th is next Monday. And then the 12th is obviously next Tuesday. And you see here the amount of FTDs that are due. On Fridays, 2653. And on Monday, there's another, like, I don't want to say this like this because, again, I'm not a financial advisor, but this is very indicative for. I mean, if these are answered for, which I know that none of these were answered for, or at least didn't have a big push on the stock price because they were not answered for at all. Because I know that there's no way that they could deliver this because of what's really in the background. It's way worse than what is even reported. But even this is huge of delivery or obviously buying pressure, and they don't have the shares to return or the money to return to the people, since obviously it'll be considered as a failure to deliver. So what's happening is people get screwed, and this is how they're screwing people on the options chain because it's not just this; it's everything that goes into it. They're screwing them on the options. This could screw the market makers on the options chain. So therefore they had to do something with this, and that's how they funnel this stuff and keep it basically unanswered for until I'm assuming here Judgment Day, and that's when it all will happen in a way where when you're selling you're like, I'm assuming that your order is going to go through at whatever the price is, and it that way you're giving back to them what they were supposed to deliver from the get-go, or the synthetics. And once all that selling is bought back, whatever we sell, everybody sells in that time, because I'm assuming it's in Judgment Day, because no one is selling in these ridiculous prices. They will be able to take all that stuff, and when later in the future so anybody goes back to try to look for any FTDs, they're not going to find any data. They're not even going to find them in Brazil or under in the Earth's crust or even on the moon. They're just going to be gone because what? We just sold them back, and that's it. Buying, selling. We bought, we held. They used the money because they took the money, made a lot of money off of it, tried to screw us over on it along the way. Didn't happen like the good old days as they always been doing. Now they're like, okay, we'll prolong this thing as illegally as possible, as illegally as possible. And eventually, when it all comes to it, the government will bail it out, and the taxpayers will eat shit. Mrs. Gloria, nice to see you in here, my friend. Jeffrey, you see, the 1440 looks really promising. And that's why I didn't want to say like it's looking for an up, but I didn't want to say any numbers because again, we have family members who kind of get a little bullish, over bullish, and they go and they get you know, like options and stuff like that. But on an overall look, not for day trading here, because again, I never support the idea of day trading AMC or GameStop. You know, I would never share anything that would say anything about that. But and that's why I limit what I say as far as the way we would go to and where we're not, because some people are interested in that. Even if it's nobody in here, people who are listening can come in and be like, okay, you know what, we'll go for it. But then they could be like, well, such and such said that it's going to go to this. They could, oh, I could expose myself for stupidity. And that's why I don't look at it. But yes, the options chain is indicating for such move to where I won't say that 1440 is possible, Jeff. 18 eventually after that with the, you see the FTDs here that we were looking at. By Friday, this kicks in. If we're already in the $18 range by the end of Friday, and then Monday and Tuesday we got these kicking in, plus let me look at this real quick. If we close by Friday at 18, nice. I mean, it's really possible, but they're doing their best on, well, at least for today. So we'll see what the activity is for tomorrow. But the $13 strike price, they've already like played it and got out of it, and then just whoever is left, it looks like retail holders on it. So they're doing their best to make sure 13 doesn't go through. We don't go through the 13, at least for now, range by Friday. But we break the 18, we're going to have a nice sizable gamma ramp. Not too crazy, but a nice one. And with all these other FTDs on Mondays and Tuesday, given that they go into effect and they're answered for, I've said in the previous live chat and a couple more, Again, I told you that the market maker got their eyes on July 15, which is not this week, the following week, because we have one of the scariest looking option chains since June of 2021. I mean, we got easily over 500,000 options last time I checked. Calls, just calls. So the market maker will be trying to do overtime and a lot of illegal crap to make sure that they don't get screwed on that. If that gets through next week, look at that. Even after the 15th, look at the 18th and the 19th. So the following after that crazy options chain, we also have on that following Monday and Tuesday, these FTDs being covered or having to be answered for as well, delivered. Boys and girls, this is very, very bullish indeed. It's interesting for sure. We'll see where it goes to for us. By the way, I do want to thank everybody for having, for obviously liking the video. It did push it out to a lot more people, so thank you so much, guys. Mr. Eric, how are you, my friend? You got it, brother. Let me see. I think I skipped many, and I want to go back just to make sure. Mr. Dibs Patel, I just seen your name through Jeff's comment. So how are you doing, sir? Mr. Nickel. All right. We also want to look at a couple of things before I. Mrs. Gloria, again, welcome. Nice to see you in here, my friend. Always a pleasure. All right. All right. So I've caught up. I catch up. All right. I'm caught up with the comments. No, I think I am. Sup, has the boss. I appreciate the stream, bro. I appreciate you, brother. It's people like you guys that obviously the family that actually encourage me and give me enough encouragement and confidence to, pop on and look at things. And sometimes I'm even in the near future. I'm going to be looking toward when I'm throughout the day, like doing my stuff. Because normally as a day trader, I'm out of day trading in the pre-market. I'm not day trading throughout the day. It's again from my humble experience in trading. When you're trading throughout the day, you're literally trading against everything, all odds. So it's unless you're a momentum trader, or in other words, a sniper who's trading by the minute, and you're like over leveraging with huge capital. And even then it's still very, very, very dangerous because you got a lot of things working. You got the repo and reverse repo operations going to affect around one-ish. So they really like, that's why you see around normal 11-ish, that's when the market starts drying up on things, and many day traders get out by then. For me, I don't even participate in any of that crap. I used to do a lot of stuff, but with time, that's why I say always experience. Time is experience that you just can't pay for. It's something that you can only gain with time. That's the only like you can't pay for it with money, but you can only pay for it with time. From my liking and from my personal interest, I seen that the pre-market, and not every day is a huge day. To me, it's just momentum. It's about the future. But every day, I mean, imagine we have over what 200 days in the year. I know it's 365, but we got weekends. If you counter those in, I don't know what the ultimate other day is, or like the rest, or the amount of actual trading days are. But if you factor that in on an average of every day, you make something like whatever, $500 or $800, 1,000, 2,000. Sometimes you're gonna have days where you'll be happy, like, hey, I made $100 on it. It's fine. That's it. You're good with that. But again, it depends on the capital that you're swinging with and whatever you set yourself to, right? And then on top of that, you also have to think about the fact that these things add up over the year. And when you can get yourself to a point where you're trading out of, like you're living off of the day trades and everything else is just pure, investment that you don't need because all your livelihood and things that you need are answered for. And I'm not saying this is for everybody, but if it's something that anybody gets into, you have to definitely get into the idea of understanding how the momentum trading works and how to just restrict yourself to a lot of things like percentages, losses. Everything has to be restricted. You have to be like literally, you definitely have to be a robot into it. But it becomes so easy once you have your system going and all these things tied down. It becomes much, 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 much easier. And then you could start reading in the pre-market. The first, like a lot of times you could have in the aftermarket access to some stocks that, had some crazy stuff. So it's easy a lot of times to see them based on whatever the catalyst was, to see them picking up steam in the aftermarket, the next or the pre-market of the following day. Sometimes you could get in, then ride it out till the pre-market, get out then, off after that first pump. But I don't prefer that personally. What I normally always do, again, this is not that this is right or this is wrong or right. This is not also advice. But what I also do, I like to do a lot of times, is one, I get in after the first initial pump of the pre-market, because at that point a lot of people fall victims to day trading in that sense. And I know this is a little side story, but what happens is on that first pump when it opens, this is when sales orders, buy orders go in, and normally it's so fast. Even if you bought and you feel like you bought it on the top, or you bought in like along the way because you're trying to ride the wave, if you don't know where that wave ends. So for me, I don't like to trade the first wave if the pre-market. I like to see when it goes down. And in fact, on the second wave, I see what levels are respected, the resistance, the support, where the support is and where the resistance is. And then in between, that's when I would look at the candles filling in and a bunch of other things. But most importantly, the resistance and support levels after the following two waves. And when I see that, then I could see, okay, this is something, and I'll look at the volume, which is the most important thing, in this whole thing. So if there's no volume, then it's a done deal. It's pointless. I'm just kind of like, you're kind of like throwing a dart in the dark, expecting it to somehow pick up steam out of nowhere. So yeah, it's there's a lot of things that go into it, but once you pack it down and you got a system going and it works for you, it's easy money. It literally is. And it depends on, obviously, when your portfolio continues to grow and grow and grow, then obviously quarterly. I mean, I look at it like a hedge fund. For me personally, it's like I got my own personal little hedge fund where every quarter I would look at those transactions and everything, and I will see, okay, I will make a decision whether I want to allocate more to day trading, or should I allocate less, or it's kind of like a board meeting with myself and while you're looking at your trades, your past trades and all that stuff. So it's important to have that organization and self-discipline when you want to do things like this, right? uh So soon, I hope that we could probably, like, in the near term, MOAS, I will be having it, like the channel will be more like trading throughout the pre-market and the market. If I'm up, why not go live while I'm doing whatever I'm doing? Not telling people do this or not do that, but I will talk about some things while I'm going through them. But that's post MOAS again, because I don't want to be a distraction to the movement at all. Right now, I'm labeled as an AMC and GME channel, but I'm a very broad investor. I've said before once also what my destiny or my goal was from the get-go with this is I'm not looking at any other stock. To me, AMC right now is worth more than Amazon or Microsoft and even Tesla to me, you know? And I'm pretty sure probably to many of you, beautiful apes. So we as apes, like right now for me, I saw it like back even in 2020 when I first made my position. I was like, okay, this thing is going to be very dangerous on the to the other side, and it's going to be very rewarding for us. But there is no way for anybody to know the extent of how far would they go in legal bullshit, And yep, 3 months later, I saw what they did in January to us, and I was like, oh my God, okay, that only added more thirst and hunger for me. So I was like, at that point, I'm going to ride this thing out and I'm going to do my thing and I'm going to continue to make this portfolio bigger with these, particularly, like for me, bigger and bigger with meme stocks, but specifically AMC and GME, to eventually, when that time comes that they are playing with, because they're dancing around. And I personally, again, I've said that it's when the music stops for them, it's more like when they decide that, okay, it's not profitable, we've already moved all our assets from harm's way and everything, now let this shit, this be crash, let this thing crash. So it's when that time comes, I knew that nobody would know when exactly. And when we seen many catalysts from the beginning not become actual catalysts, that they worked around them. I mean, even if an asteroid crashed into Earth, there's still not a catalyst. Like, as dark as that is and crazy that is, they will somehow still say that the S&P 500 is going up 1%, and everything outside is like burning, and like you got people in hazmat suits, like it's so screwed up. So at that point, it was pretty evident for me psychologically that we're not forcing this. We're going to benefit from this. We're going to have our day, but we're not forcing it. It's been long overdue, and they dodged unlimited amount of catalysts. I don't think there is a catalyst for us. I think it's that the war, I've said this again over and over again, the war between us and them has already been won long time ago. It's just about when they will let this thing go. Whoever is around and still had their conviction on the thing will be rewarded very insanely handsomely. The ones that don't, will be left with, I wish I would, I wish I did. Again, this is my personal opinion. This is not financial advice, but this is my take in a nutshell on the whole overall image. So we'll see how it goes down, but all these things look really good for the mean time. Now let me look here for a second on so it respected this, they respected this, and then but oh, you see this guys right here. We were dancing in that bearish sentiment, and we're right on top of that channel right now, diving right back into it to go and look how here if we break this channel down to here, 18736, I would say. This that will still be respected with this. Yeah, it has to be that right over here. So yeah, I was correct. It was 18736. At that point, we're going to be basically breaking out of this bearish trend, and what is saying we're going to be breaking out to the downside, not to the upside. And at that point, that'll be for me a conviction that okay, it checked out of that down to the bottom, which means that it's indicative that we're going to go and retest this previous 52-week low, which we touched like what was it, a week and a half, 2 weeks ago, at that 17,000 range, 17,6, 17. 17,596, which coincides with 17,500 that I was telling you guys about it earlier. And the crazy part about that, holy moly, let me show you something. See where we are right here? We're at that support level that we had back in when we started going up in December 14th of 2020. It's going to break this trend, and if it goes into it, we can break into these channels, guys, where we could be in the 7K range. This is the craziest thing we will witness up to this point. Well, first it will make some, if it breaks the 17.5 level, it's gonna have some support at the $15,724 range. But I think it's gonna blow past that, and we're gonna be here in the 7,000 range. I'll be extremely surprised if we go back down under 5. Extremely surprised. Then again, I'm not going to be upset. I will be extremely happy. I will probably be one of the happiest men on this globe or in the whole galaxy. This was to happen, because it's going to be like a long-term kind of thing, but there is nothing better than this to be as a long-term investor. And why? As I told you so before, guys, when people are saying they're scared of crypto, and you got a lot of articles and media coming out and saying crypto is not regulated and all this stuff and you're gonna get robbed. Well, obviously you see this and you see how many people made money. Now the people that obviously are investing this for the long haul, they probably will be like, okay, I missed out on this, but in like whatever 4 or 5 years, 2 years, whatever the case may be, the time frame, they'll be like, okay, well, I'm glad I didn't sell at this because I was up there somewhere where the chart doesn't even show yet. Now, the thing is, if you are a person who is trying to live in the moment, which I personally like a lot, I love thinking for the future, preparing for the future. It's important. But why? I also have a contradicting thought. Like, why dedicate majority of my present or invest majority of my present into for the future? Because that day will come, and those days will come. I might as well, they will come with whatever they bear with them. But right now, I'm living in today. Yesterday, we already know what happened, and that's it, is gone. We can't have it back. We can't change it. But today, we're living it. Tomorrow, we don't know what happens. So it's good to plan out a small portion of your time, obviously, into that, but I don't too much. So what I'm trying to get to with here is that if you were anywhere here and you've seen Bitcoin like in the 4s and the 5,000s, you've seen Bitcoin go up to these ranges, and now you see yourself back here, you have no one but yourself to blame, honestly, because look how long it took. It took 2 years and a half, damn near, for you to get out in any of these places and basically buy back again. Now, unless you have Bitcoin since back in like 2014, 2015, or 2016, when it was like in the hundreds still, or in the $1,000 to $2,000 range, I would say, I probably would somehow still understand. But then again, why would I be holding everything? And everybody's different with this, but for me, why would I be living a subpar life in order for me to save all for later? And I guess it comes down to how you look at this, your outlook on life. It's important to plan for tomorrow, because you're not going to be physically as available or tooled, whether male or female, obviously, to take care of yourself at an older age, but which is understandable. But that doesn't mean you lose today's world or your life today. Again, for me, I would definitely have been taking profits around here, here, here for sure. If I timed this correctly, I probably would have been completely out. And then, because I know the markets never just rocket up, it has to eventually come back down. And eventually, you're setting yourself up that way with capital that you never had, and you got it packed down for your emergency times like these, where you see it dropping again. You can rebuy back in at a much lower even average than you even had before, and that way you made so much money here. All that is profit. At least half of it could go back in when the actual dip gets to it. Or you can choose where you buy, like here, then allocate another 20%, 25% here, and then if it eventually hits here, and I do believe that it will somehow get down to those levels, it's going to touch, and if it respects it, I feel like this is where it will stop, in these areas right here, the 11K. If it breaks the 11K, God help us, because or the Bitcoin holders, because they're going to be looking at something that most likely will go down to $4,000 or $5,000. In the same time, if this was dangerous, as I was saying with the beginning of this topic, if this was dangerous and all that, you've seen it on a technical level. If it didn't have a future, if this is why I said I will be the happiest man on the galaxy if we see those drops in Bitcoin. Personally, for me, I'm not influencing anybody here, but hear me out. Why would they be investing millions and billions of dollars in creating a market maker ecosystem in the crypto realm if this was not something that was never going to be adopted in the future? We know these entities that we're against. They would take $1, and if they can split it into half, they will. They would not be late. They'll split it in half. If they can legally counterfeit dollars, they would do it in a heartbeat. So why would they be spending all that kind of money to have that? And they have already the infrastructure, according to all the news outlets. And who are the market makers? I've mentioned it many times, and I'll continue to say it again. Citadel, Virtue, and possibly Sequoia, but they have partnership. They built a spider web, similar to the stock market web that we are in right now, similar to the web that we're caught in right now. Which, who are their partners? Okay, well, let's list them. We got Charles Schwab, Fidelity. It's already on the board with them. I'm assuming all the PFOF, the payment for order flow apps, are already on it. So you would wonder, why this drop? Who does it benefit? Because again, my final conclusion is that crypto is going to be the future. It depends on how you look on crypto. For me, I see that crypto is the future. And since it is the future, based on what I see, the transactions that they're making, the moves they're doing, and everybody obviously does do their own DD. But for me, when I see them do that, it verifies to me that yes, this is the future. Otherwise, they will be wasting time or money on it, trying to become market makers in it. That's one. Two, that means if you look at it that way, that means this drop that we're seeing is to create sell-off. So if the new market makers were to be the new market makers in this industry, what do they have to have? Liquidity in crypto. What else do they have to have? Just like the stocks, they have to have positions in every stock. Well, if they corner the market here and basically they get in this dip, and perhaps when it drops even lower down to this range, the 11s, even worse down here in the 7s, and then the 5s, and again, all this is hypothetical. They get to scoop all that up. Whoever is still holding Bitcoin will be a person who is holding at a higher evaluation. We know that the highest two institutional investors in Bitcoin are MicroStrategy and Tesla. And those two, their averages before the dip on Bitcoin was around 30,000 a coin to 31,000 a coin. So I know MicroStrategy have announced that they purchased more, like a couple, how many? It was like 140 or I forgot how many Bitcoins, but they averaged down. They bought some coins, so they're enjoying the dip. But for these market makers, this guy, this Citadel, and what it's doing to become the market maker, if they come in and they have a lower average cost on everything, well, now they can corner the market. And if they have a majority of the float too, now they definitely can no longer be screwed by retail, because most retail would have been out in this drop. And then in the same time, the whole, okay, we're going to buy and we're going to hold only benefits the market maker at that point more, because their value or their asset goes up in value even more. And at any given time, they could chop people off, but their roots will be all the way at the bottom. It won't be taken off. Why is all that happening in this demeanor? Because we came in back in 2020, and that's when the movement started. And we came up with this brilliant idea of buy and hold. And they got screwed on that because we own majority of the float in AMC. And they're extremely over leveraged, causing them to go through all this. How can they defeat the buy and hold idea? The only way is to pre-control the float of whatever asset, or in this case, these coins, are ready, so that whoever wants to come and buy and hold, they can buy and hold at a much higher, obviously, valuation. And at that point, I would assume that all institutions will be pumping it up. I mean, eventually I see Bitcoin in the hundreds of thousands, where it's in the far away from the reach of retail, unless they're buying fractions, of course. And it'll be utilized as a global currency. And every government will still have its digital currency. Like us, we would have the CDDC. I'm assuming here again. I'm thinking way far out into the future. And whatever the value at that point of our CDDC, it would fare with another government with their also digital currency, and they will both trade under the umbrella of Bitcoin. And again, this is my personal thoughts on the whole thing. Now, I do believe also in this drop, when this drop in crypto realm finishes, it's going to coincide with us at some point getting our MOAS. And if I'm correct also, that's when a lot of people will turn around and jump to the crypto realm. Unfortunately, at that point, that's something that they've already thought of, laying out traps. You have to be careful. If we're traveling far into time now, I'll just tell you, after MOAS, you would have to be careful. Not all these coins you've seen pumped before are going to be even around. They could get completely, they're like traps. You know, not all of them. So you have to research and look into the coins and see which ones have, one, proof of concept, two, the adoption of all institutions in the world, or majority or high institutional adoption. Because at the end of the day, if nothing is adopting it but retail, we are at that point the only ones that are dictating its value. But at any given point, many of us could sell it, and now it's no longer useful, you know. Because again, where are you going to use it if you can't go buy a car with it, or a house with it, or, you know, conduct some business with it, or import or export payment, or whatever. So you would have to look then very carefully at where you put your money. That's why I've always, when I'm talking, I talk Bitcoin. because this thing is already adopted by the biggest companies. In fact, the 100 fortune companies, I believe all of them own some sort of form of Bitcoin. You guys can go and research on that and see it. So for me, that's huge. I want to make sure I want to be a part of this train before, you know, the whole run up and then they control the bottom. I want to be part of the embedded roots that are far deep down. So that's why I'll be the luckiest man or be the happiest man in the galaxy if it falls in these ranges, because the capital will be there also. It will coincide with the MOAS. The capital will be there for me to further make my MOAS more as MOAS. As you can tell, I'm getting more tired and more tired now. I need more coffee and hookah. I need to get something to eat. I didn't eat anything all day, honestly. Hopefully you guys like this. Let me see who's in here first. Let me look at the comments. Say hello and, bye and hi to everyone. Where am I? Dips Patel. Adele Al-Mashir. Oh, look at this, guys. A shout out to one of my brothers, Adele Al-Mashir. That's actually quite a surprise. This is one of my inner circle friends. Uh, wow. So I wonder how you found me, but nice to see you in here, brother. Big shout out to Adele. Pilot and C. Hiya, AB. Thanks for the stream. Well, thank you for stopping by, Pilot and C. You guys are getting really fancy with these names, I swear. There are some names and it's like, how can I read this? AB, you keep us calm and level head. Well, one, Mrs. Chase, I'm very, very, very honored to hear that. But that's overall the point of it, right? Um, I'm not a person who likes to influence activities, whether to, if it's happy times or good times. I don't promote hopeism, and so that way that it's built on false. I like everything to be real. At the same time, I don't like to scare people and start screaming and yelling like this is what they're doing to us and whatever. What do we expect out of that? I have to tone my emotions down because trading have zero emotions. So you have to be, in order for you to not have a biased thought and opinion, especially in the financial markets, you definitely have to remove the emotion aspect out of things so you can be more clear and level-headed, as Mrs. Chase just mentioned in here. So you can open your mind to more of, more dimensions to see what could be really happening, not black out. If you're emotionally involved, then you're going to black out a lot of situations. That could be the truth too. And I don't want that. In order for everything to be real, you have to be taking everything without any emotions being involved so that I could see it clear, whether it's shady or good. It's you can see things way more clear when you are clear and level-headed so that you're not either overreacting or deteriorating into the wrong lane and start, going far off, far away from what really is gonna happen or what is happening. And then you would go ahead and also, you know, uh, let all those emotions push you or fuel your drive in all the way in the wrong direction. So I appreciate it, Mrs. Chase, and that's an honor for me to hear that from you. Thank you. Uh, let's see. Jeffrey's lighting up the chat. I love Jeffrey, man. That's one of my brothers right here. Sub has the boss. Thanks for sharing your experience with us, AB. Well, obviously, thank you for listening. And at any given time. That's an honor for me, you know, to share things. As I said, this is guys, whoever already subscribed here for a long time knows me already. Any new people or any of that, just so you would know, and time will tell. I'm always going to be the person that's going to be like this. You're never going to see an AB. You could see over hyped AB sometimes, but perhaps on and on the MOAS. But you're not going to have an inconsistent kind of AB, and an AB is always like this, straightforward. So I don't have filter in here. Sometimes that gets me in trouble, but I would have it no other way. So hopefully you like that and you value that. All right. It's a great time. It's an hour before my friend Pantheon goes on. So I want to have a respect of that time. This is great. Thank you for the reminder, Andrew. Francis C. Okay. What else do we have? Tyler B. Nice to see you in here, brother. Tyler B. You sound like Lou right now. Derek A. Kudos to you, brother. How are you doing? Look, Tyler B. 11K Bison. Got it. Well, if you think so, brother. Um, they always come in with a sleight of words like magicians do, the sleight of hand. Houdini, Jeffrey, right? And Tyler B. Robert Kiyosaki agrees with the 11K Bitcoin buy zone. Good stuff, AB. Well, I don't. Unfortunately, I don't know Mr. Kiyosaki. Sounded like the you know, the bike maker, but Kawasaki. But no, I'm not. I'm not poking fun at anybody's name, of course. My name can't even be pronounced. It's very long, the last name. You guys don't even want to butcher it. But that's great. I mean, again, that's an honor for me. I don't know the person, but it makes me feel good that others see the same thing. Adel, ha! Ask it. AB, I don't know if you already talked about Amazon or not, but do you think of it? Yes. So Amazon, as you guys can see, in the past couple of weeks, when it did its reverse stock split, now you see it at that range of the 103, 104. Now it closed down where? Let's see on the chart. Boom, 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 boom. What's this? Oh, this is why. Because we're looking at crypto. There we go. This is the real one. Wow. Well, sorry. Respected it, went down. As soon as it over, it closed up. Amazon right now is at, oops, my laptop is very sensitive. It's at basically at 113 and 57 cents. You know, after this reverse stock split, it was still already in a bearish trend. It was, you know, it made new 52-week lows. I think we're still far away from the bottom on it. Honestly, this is just my personal opinion on it. Um, Here's a clear image on where we at throughout the time since September, August actually, of 2021. Holy moly, you guys see this? Look at this. we got a head and shoulders. This is indicative for a price down. So we're going to be seeing something whenever the cycle starts. Should be really soon though, right here. And what is basically the head and shoulders? If some of you are asking, this basically when the market makes a high in this form, you see it here, but then when it drops, it fails to make new highs as well again. This one is just too perfect. Like it was too obvious. You can see it right here. And that's also following a bearish pennant too. So I'm anticipating here somewhere, maybe tomorrow, in the short term, for us to do something like this and further go down lower and lower. So yeah, my thought on Amazon long term with capital, maybe after MOAS, is to take money from there and go ahead and load up on some of these value stocks, heavily. But again, it all depends. Like what's the case? What's happening with crypto? What's happening with the stock market? Where we at? The stock market will always rebound. These companies are not going nowhere. Amazon ain't going nowhere. Tesla is not going nowhere. Where are they going to be at that point? You'll get to a point, and trust me, guys, you'll see. Not trust me, bro, but trust me, guys, you'll see. You're gonna get to a point where you'll say, even if you have all the capital in the world, you say, I wish I had more. Just wait for those days to come. So yeah, a bearish trend for Amazon as expected to be in this red market, but on a near term, I see obviously we see here the head and shoulders. So therefore, I see another down, and I expect it to be somewhere breaking that $100 range per share, and perhaps we'll see. Like as far as how low would it go? Let's see. It's a little fun. We can't see it exactly, but it's a little fun. So if it breaks the 100, it's all the way very indicative for us to first hit that $80 range, like 89, 87, 85. But it also will depend on how far. Like the first stop for me after we break 100 is going to be at 89 bucks, which is a lot, by the way. If it drops just from 100 to 89 bucks, that's not a little drop. That's an 11% drop on a stock, something like, especially that's not supposed to be as volatile like Amazon. So it wouldn't be over one day. Probably it would probably be dependent. If the crash starts, then you would anticipate for us to stop there first, somewhere 89, 88, and then dependent on what we see at that point, if we break that down further, then wow, the ground is the limit. It's not just the sky in this case. So yeah, Amazon is something that is definitely huge for the right value. Even right now, at this point, when markets rebound, like let's say in the next 4 years, Amazon's value is going to be extremely much higher than where we at right now. Now, I'm not saying this is the buy the dip moment, because the times that we're in, if you are a person who thinks long term, this is for you. This is like a safe bet, because you have a lot of money, because you're going to make a lot of money on the way up. Amazon is not going to be here at these evaluations of 52-week lows for a long time, except the recession or depression, or however we want to react to portray these times that we're in. And even then, even if people load up here, I know a lot of institutions are loading up, and then perhaps average down as it goes lower and lower, because timing the bottom in a lot of ways is extremely difficult. Now, the crazy thing with these times, that the bottom, it's much easier for us because the bottom will coincide with the market full on crash. I don't see we have to still keep in the back of our head that the government got that whole SFT program with the NSCC to try to prevent the flash sales and basically a market liquidation. in order to answer to things. So this could be a bottom. You know, that's why I said it's important to see what we have. But as far as for the short term, it looks like it's going to do another dumper and perhaps break that $100 range. Hopefully that answers it, bro. Let's see. What else do we have? FJR. Okay. Thank you. Or pilot. Thoughts on Ethereum under 1,000? Already did it. It already did it. Remember last week, the week before that, what it made a new. Well, of course, it's going to go lower than that too. Again, in my opinion, it's not financial advice. Let's see. Oh, yeah. How about Ethereum in the $600 range? Yeah, the where I could see a case where Ethereum breaks down to, breaks the 600 down to the upper 500s. I don't see it like lower than that unless, like I said with Bitcoin earlier. Can you imagine Ethereum 140, 149? I see under 600 in with surprise too, but or logically I would say, but I would be the most shocked and also the luckiest man in the galaxy if I see Ethereum in the $200-300 range, maybe perhaps the upper 100, say like 150, 160. If it drops to something like that, again, I'll be the happiest guy again. I mean, just being in the $500 range, I'm gonna be very happy. But you definitely have to have long-term expectations with something like this. What's the good thing about Ethereum to ABE? Or if somebody asked that, if no one asked that, I'll ask it and answer it myself. Is that you have one, it's the biggest blockchain that is being utilized. One majority of the NFT market is off of Ethereum, runs off of Ethereum. Many coins are running off of Ethereum blockchain, so it's huge, and they're constantly making it even more and more powerful and better, so that you could have less gas usage. And as things progress, obviously you can see it. So if it could do this and be in the 6,000 and a $4,000 or $5,000 range, obviously from a huge bump that happened in it, now there people are, even institutions are collecting their profits. You could tell, and that sell-off is liquidating. Somebody is piling up, and this is why all this points finger to the new market makers uh, that are trying to obviously corner that market before it goes back up, as they are on the bottom on the stage when everybody else is coming in on the top of the tree. So yeah, for whatever it's worth, yeah, I see it um, without being extremely crazy. Possibly, again, this is all speculation. Hitting the 600 to a little bit less than the $600 range. If it doesn't, and it goes even lower, it would be crazy if I see it in the three to $200 range. That's like the craziest scenario for me. Will it go to it? Very possible. I mean, it's possible. It's not very possible, but it's possible. Um, it's definitely one of those, like those two, Bitcoin and Ethereum. Those two are the ones that, for me, for AB in specific, that are like, okay, if I have to go to sleep and put my money on a crypto, those two are the first two on my list. Hopefully that answers it, brother. Let's see in here. Andrew Francisi. Francis, I would say it that way probably. I had a friend from Congo whose name was Francis. What was his last name? Forgot. He does music now down in Atlanta. Cool guy. Comes from a great family too. All right. Let me see here what has happened because I think my comments over here have stopped. Um, maybe we can't see the end of the chart. You're in that corner. Just FYI. Oh, you guys are looking at my face. I forgot that's where my square is. Oh my god. Sorry, guys. All right. All right. So it looks like there are no more questions, guys. And we got, I'm caught up with this. Oh, okay. So yeah, it is about the name. All right, my beautiful and wonderful family. Thank you. Thank you so much for obviously stopping by and having a chit chat with the people we've obviously talked about everything. Let me take a final look at what's happening. Crypto continuing, yes, Bitcoin and everything continue to dump. Back trying to maintain or approach that support level again. And we will see if we will break it. 18.8, yeah, about 18,800 last time I checked yesterday was the one we break underneath it. We will probably most likely go down to the actual support, which is the 17,595 bucks. We break underneath that, you're gonna have margin calls happen for a lot of brokers, whether Coinbase, whether many will have. And this is again my thoughts on it. So we'll see what will happen. It's an interesting night. I think that there could be some crazy volatility in Bitcoin or in crypto, but we will see that closer to around 2 o'clock, 2:30 ish. If you don't see much of that, then I would anticipate them to keep it like this, consolidating in this range or drop into this range and consolidating, and then perhaps drop more or pump actually like it did this morning, pump and then collect its profits after. And again, it's like a fisherman. What they're doing, it's like a fisherman. They're like throwing their web, their net out in the ocean every day and see what comes of it when they take it out, empty it out, and then throw the same one again. Besides all that, ooh, I told everyone throughout the weekend to look at a possible pumper for Tuesday and perhaps this week, which was HGen. It didn't do too crazy, but again, I'm the only reason why I'm the only one reporting this. No one had reported this or talked about it. Is because it's right now you see it's flown underneath people's radar. So today it went up, it had 10% gains, and then in the aftermarket it followed up another 2%. So we got a 12%. If you were one of the people that got in, and for example, you put in $10,000, you just made even just that 10% alone that just made you $1,000 easy, which was a great day trade over one day. Uh, Congrats to the ones that saw it. And in case you did do your own DD on it and went ahead and invested in it in the pre market, you would have seen, 10% gain on a day trade. You know, even $1,000 would have made $100 in just one day, and it was amazing. It's still continuing to go in. This is not what I'm anticipating. Still, I'm anticipating more yet to see. So if again, do your own DD, guys. But I just wanted to bring that back out because I did report it on the Discord. It's a free Discord. Whoever is in here still who's not on Discord, I can definitely share the link with you guys. You could join. Again, it's free, guys. It's just where the members of this community are always talking and you know, gathering up with. I'm gonna post it in here. Where are you? Ah, thank you, King Jeffrey. King Jeffrey on the spot. So yes, that link, guys, will lead you straight to our Discord. Again, it's free. You'll see most of the people you've seen here. You'll see them in there, and people could talk. And the cool thing is also there's some chat lounge so that people could go in and speak as well with each other, which is cool. Sometimes I join some of these chats and then we talk. I mean, whether in this Discord or some other cool Discords, check out Pam's Discord as well. This is Pam. Pam is one of the most wonderful individuals in this community, hands down. She doesn't need me to say it as well, but I'm trying to get her link now. Where's the link to her? Jeffrey, not to be very noisy, but would you happen to have the link to Pam's Discord? And also, guys, don't forget, in about 30 minutes, we're going to have, if you're looking for a great radio experience and a great show throughout also the night with a lot of influence and a lot of good DD, and in the same time, that keeps you in tuned as well. There's one called Pantheon. If you're not familiar with him, you should. Pantheon AMC. Let me post his thing as well. I'm going to post his channel because he does not have a Discord. He doesn't want to. He's busy as is with this. Let me give you guys the link so you can be redirected. All right, and here it is. I think Jeffrey left that Discord. Let me see. I'm gonna get Pam's Discord too. I have to. Where's Pam when you need her? Not the most tech savvy guy, as you guys can see. I want to share it. I have to share that. That's also a great Discord to be in. Oh, I don't think I can share it because I think she have to do it. Yes. That's why. That's why. Okay. Well, my beautiful people, yep, like I said, once again, I am out of here, and hopefully you enjoy the rest of your night, guys. I'll see you at the Pantheons if you go there. And with that being said, hopefully you enjoyed our show tonight, guys. Thank you for stopping by. Thank you for liking and subscribing, and much love, AB Investors.